Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Thursday, November 29th. And first things first, I want to say a good trade to members today. We faded the gap on SPY, and that ended up being a profitable trade. If you want to look at it intraday, you know, what we were looking for a gap close. I sent out the alert in the 42.20 area, you know, give or take. We had a flush down, took a little bit of heat as it came back to our entry price, and then eventually flushed down, closed the gap. That was the trade, and ended up being the right trade. So, you know, made some money today, which, you know, was nice. As far as that, let's go into the market commentary. So, first things first, want to say that overall, I have to say the market, as long, you know, we had the point of control for the year down at 1361 or so. It was somewhere around there. But guess what? We had 2 days that closed below that level. Now I'll mark it for you. 1361. Basically this big volume that stuck out. 2 days that closed below it. Then we had a reversal on good volume and then a fall through to the upside. Now despite the fact that this volume was light, has been light, yesterday, in my opinion, was a pretty important day, a bounce off the 200-day moving average and a fall through off of those levels. We broke through this resistance here, so that's something that you want to see. Now we're at the 50-day moving average, so we're waiting to see, okay, what's this market going to do? If you look at it on the SPX, we're still at resistance here at the 50-day, so you want to take note of that. Now, with that said, let's go look into a smaller time frame to kind of get the levels we're looking for. So basically, this month is going to end this week, tomorrow, last day of the month. That means we're going to be looking at December's profile. Excuse me, we're going to be using November's profile to trade off of in December. And so far, you know, unless if we retest this high volume area down here, which we easily could. You know, I'm looking at this volume here that we've created throughout, you know, the last, week or so, last few days. 1405 point of control for the last month, down to 1395, this range. That's kind of, I think it's your pivot that you want to use for the month of December. Members, you're going to be getting the monthly newsletter coming out probably this weekend. And it kind of go from there. We also have the gap, which I marked up here at 1425. So that may be a target for the S&P. Right now, futures are down just a little bit. But that could change it, obviously, overnight. Basically, let's just continue to ride this thing up until it bucks us off. Like I said, we had a good close of the gap today. That was a good trade. But from there on, we have to focus on making money. And that's what's important. So the euro, I have to say, today's action was pretty constructive. Let me go down to a smaller time frame. Basically, came down, value intraday or intramonth value area high, ends up being support right here at this 128.9 level, and almost closed the gap. But anyways, then today we gapped above those levels, above this resistance level, and so far it's holding. I would take your cues from the euro. Continue to watch, you know, 130 on the upside. You know, use that as your bogey. If we can't hold, or if we can't get above those levels, then I would just use 50-cent increments or 50 tick increments. 129.50 and then 129. You know, just kind of consider that your range. And remember, where the euro goes, the S&P tends to follow, and vice versa. That's just kind of the way the market is. And get used to it pretty much. Now the dollar, this is something to point out. The dollar is bouncing off last month's point of control. That's why I love volume profile, is the levels are so accurate and it's volume. That's where the emotion is in the market. So basically, resistance was the value area low for the month of August. We came up, literally tested those levels. This high volume area here, this thick black line is the value area, which is what I'm talking about, which was resistance. All right. Then this high volume area here on the dollar was resistance. Guess what? We gap below those levels. The point of control for the current month formed at this 81.06 level, and guess what? We gap below those levels. We come back to test it. We fail, and then we get our sell-off. Where do we go? We first test the value area high for the last month. Was support for a couple of days. Then the 50-day moving average, the 20-day moving average comes in, and also this gap right here holds as resistance. We see a follow through. Now we're touching the point of control for the month of October. We're seeing the point of control for the last 90 days up at, down at these levels. As long as those levels hold, I think, from the short side, you look to scale down on your dollar, unless if we flush through, then obviously you want to remain short the dollar. Then you look for the month prior's point of control, and then from there you look at the lows. So keep that in mind. Let's look at it on a daily chart. That resistance, which I drew a while ago, ended up holding, and that was right in line with the S&P bottoming. So keep that in mind. And remember, the S&P point of control was at 1361. So this was a fantastic opportunity in the market. We caught it being long Apple. That was the majority of where my money was made. And, Apple value area low for the year, not Apple, NASDAQ value area low for the year, a bounce off those levels. Now we're at the 50-day. Now we're at, what should be some type of resistance. We'll wait and see. If we look at the NASDAQ on a intra-month basis, we're up at these highs here. We'll see if it retraces. We'll see what it does. I guarantee this, though, if we're trading in this range tomorrow, basically where we traded today, which we should, we will see the point of control shift from down at these lower levels, 2580 up to 2680 or so. What that means to me is if we can get above that, we're immediately going higher. We're going to test the top of this high volume area from back in October. We're going to test that, and then we're going to test the 90-day point of control level, 2770, which is also pretty much in line with these swing highs from where we really sold off from. So that's kind of your levels on the NASDAQ. If you're looking at Apple, which you should be, you can see we already got the point of control shift. So continue to watch this level. 592 value area high for this current month. If we get above that, then you're looking at 600 to 605, and the reason why is because 600 the psychological level, 601 is the 50-day moving average, and 606 or so is the value area low for the month prior, which we did not touch this month. So keep an eye on that, and you want to be paying attention to that. On a daily chart, let's see. It's all good in the hood. 604 is the point of control for the year. So we're going higher on Apple. There's no doubt about it. It's just the ceiling's kind of right there. So just be aware of it. I've been scaling out on Apple into strength the way up. So I'm just kind of riding it from now. Now Starbucks. This is what I was kind of expecting from Starbucks. I wanted to get involved yesterday. I did. The position's up 1.5% or so, which is great. But what I'm looking at, and I only, members, the size of the position, what we're looking at here is a market or a Starbucks that could be in more consolidation. Sure, it looks like it wants to go higher. Fundamentals are still great. Point of control for the year held after the gap opened from earnings. So we gapped higher from earnings, came back, tested the point of control, and then moved higher. No doubt about it, light volume, so that's something to be aware of, but where in the market haven't we seen light volume? And that's important to notice. So that's why, I bought the size that I did, was because this could, rest for a little longer, and I'm okay with that. I want to be in here for a longer term point of view, which is, kind of not neglecting, that's definitely not the word, but it counteracts, my usual shorter term time frame. But sometimes you need longer term views. It helps with position trading and being involved in the market when maybe you miss a swing trade here and there. Gold, that pullback from what was it, 2 days ago? No, it was 1 day ago. The 28th, yesterday. Right down to the point of control for the year. Just kind of leave it at that. I think as long as we hold the point of control for this month going into December, let's call it the 50-day. You can look at 1700, however you want to view it. One thing to note is the last 2 months point of controls are below these current levels, so you want to pay attention to that. We did fail from the 61.8 retracement, so there are some levels that you need to be worried about. You know, and obviously the fiscal cliff, that's going to weigh on things. So keep an eye on that. Also, I'm going to bring it into a different light here. The volatility index, this is just magic right here. And if you haven't watched the volatility index video that I've made, really email me, nick@volumeprofiletrader.com, because it's magic and it's going to improve your trading. The reason why I looked for a gap close was because the VIX did exactly what I wanted it to do. Came up into this resistance zone, you know, resistance, breaks out, support, breaks down, back into resistance, sell SPY, close the gap, bam. You know, we got a closed gap, the market rallied, or I should say the VIX rallied into this level, and then obviously sold back off to these lows. So again, you could be in a situation where the market goes from 15 back up to 16.5 on the VIX, and then in that case, you know, on the S&P, you could be looking for another pullback. It could be a little further, you know, down to 1405 or so, which is what was resistance, now should be support, right? So we'll just have to wait and see. But, you know, that's kind of what we're looking at here. I haven't showed this in a while. Bonds off the point of control for the year. We basically broke out from this wedge, tested the highs, and now we're retesting the pullback. You know, this really isn't my trade. Never really has been. I tried earlier this year, and it just didn't work out for me. But if you are a bond trader, at least you have your line in the sand, which is the point of control. Looking at the 10-year, now this looks a little weaker. And remember, if bonds sell off, which, you know, I doubt they will, but there's that chance, then obviously money has to go somewhere. You're looking at equities for that. So the other name, you know, I'm kind of kicking myself for not getting long, is Google. Yesterday I was really looking at it. It really looks strong, and let me get rid of all these drawings so we can see. You know, I was looking at last month's point of control. I was looking at how I was trading off of this month's point of control. I was looking at the higher low here, the good volume that was coming in. It was right at the 50-day or so, or right below it, around 680. And I was thinking, you know, this looks really good, and it looks like it wants to go higher. And sure enough, you know, we see that it did. But I just wasn't willing to put the risk on. Obviously, that wasn't the right trade. We're back at these highs here. You know, this was our first resistance point, and then from there, you're looking up towards over 700. But the point is, you look for these trades, you get them, and you take them, because that's what you should do. You're a risk manager, you manage your risk. So, members, good job on the trade today. If you took it, you had an opportunity to get in. It was a good trade. Worked out within 2 hours. Take your profits, run, and then move on. So other than that, you know, I'm still treading water as far as staying light on the portfolio allocation. Still a lot of cash waiting for this fiscal cliff. But there is opportunity in the market, and that's what's important. So anyways, take care, have a great one, and I'll talk to you this weekend.